Okay, so everybody know like tradingview.com, right? So let's open the tradingview.com here, and this is the very simple strategy I'm going to explain here. I will cover the two strategies for like if you want to trade on the daily basis, hourly basis, or weekly basis. So basically, you have to concentrate only on the price section of the stock, the price action which will be the closest towards daily, weekly, hourly, and monthly. So the price which is common between all the four duration of chart, that price should be your entry point. So let's try with Apple, right? So Apple, so let's choose this Apple stock. You can say like Apple is incorporation. Now we have to, this is opening right now. So Apple is like the yesterday closing, on the Friday closing was like 204, and it was 2% down. So what you have to do, you have to go on this full feature chart. I already created one login ID, so that's why I can like I already settled my added my all the chart and everything. So you can see I already added these monthly averages for the chart, and it will impact, like you can also do, you can add these monthly moving average or any indicator of your stock, and you can select this chart duration, like this is currently weekly, so you can set like weekly, monthly, or daily, whatever you want. And then I added three indicators. So this is my trial account. You can add only the three indicators at a time. If you purchase this tradingview.com account, so you can add like many as indicator, and then you can create some alert also. But these alerts and everything, like they're like a lot of, this is the number one website worldwide, and almost like every trader, every active trader use this website for stock investment or for trading. So this is very good website. Most of the people but yeah, you can create your order, you can do trend setting, you can do alerts and everything, and all the charts and a lot of other stuff. So I know. So let's focus on this. So this is weekly chart, and you can see I added three indicators. 65 is the orange one, this one, and then the 18 moving average, 80 days, and then 27 days moving average. So, and this is a weekly duration. So you can see wherever it's the 18 moving averages is crossing to the 27 moving averages. You can see this one. So 18 is like the green one, and 27 is yellow. So where, when, so this is like 7 April 2014. So on 7 April 2014, on weekly chart, the 18 days moving average crossed 27 days moving average on upward side. It's in the upward direction, and this blue line, this is the price action. So when the price action, 18 days moving chart and the 27 moving charts is jointing, it's like it's coinciding on one point, then that point is your focus point, and if it's crossed towards the upward direction, then you have to make an entry. So this is one of the strategy on the weekly basis, right? So similarly, you can see wherever this 18 days moving average on the weekly chart is crossing 27 moving average on upward side. So see, it crossed here onto 14 April 14, and it never ever like crossed downward. So price is up. So currently $74. So now you can see like on the right side, on this side, this is the price action of this chart, and so you can see this on 14 April 2014, when Apple price was $76 and 18 days moving averages crossed 27 moving days averages on the weekly chart. The price action goes upward, 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 upward. And here, when here, like 3 August 15, so like almost like 1 year, the price moved in the upward direction. And it always follows these 18 days moving average, right? And when it crossed downwards on the 3rd August 2015. So from $74, it becomes 125. You can see this is 125, right? So it's almost like how much? 75, 125 minus 25. It's like 30, 20, $50. Like, so it's almost like 80%. 80%, like if you invested like 100,000, your $100,000 on 14 April 14, then 3rd August 2015, your amount would be like $180,000, right? So you almost like in 1 year, your stock got 80% of uh, profit, right? So this is, and you can see like clearly on a weekly basis, when once it crossed the downward direction, the price is getting downward. Again, it's not even, again, it's trying to touch, it's trying to cross in upward direction for the this 27 days moving average and the 18 days moving average, but it's not able to cross this upward direction. And again, the stock came back. Then again, it tried to upward, but it have not. Then again, it came back. Then here again, this price action crossed both the moving average in the upward direction. Price action also and our this 18 days moving average, 18 days weekly average also crossed in upward direction, right? So you can see like once it crossed in upward direction again on 19th September 16, like it took 1 year for consolidation exactly 3rd August to the July 16, September 16, right? So then from once it 18 weeks moving average crossed 27 weeks moving average in upward direction, our Apple stock goes up, 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 and here it tries to move downward, but it's sustained, and then again here, like till September 16 to October 18. So price was here $100 and it's like 200. So exactly in 1 year again your price got doubled, right? And you can see like once this price action cross this is stock in the downward direction, and then first price action cross downward direction, then your weekly 18 weeks moving average of course cross in the up downward direction. So now stocks getting decreased, it's appreciated, and the price action got in the lower direction, and then the price got reduced, right? So now from 204 it came to 146, then again it crossed, then again it's like finally 174. So you have to like see, right? So again in so right now the condition is price action is trying to penetrate this Apple stock on the lower direction. So we have to see like in coming some 3-4 weeks. If it crossed to the downward direction, then you just have to close your entry. You have to get out of the entry. Whatever position you make, you already have entry. You just have to go out because you don't know it could like go how much. It could then it's based on your like first resistance is this 172, then 147, and then your 18, and then it's like 91, right? So you have to like play accordingly. So now, so these two talks I just talked. This is totally on the 18 weeks moving day, 18 weeks moving averages and 27 weeks moving, right? So now one moving average which I more added here is like 65. You can see this orange line. So 65 weeks moving average is acting as a support here for like if you see since the start, whenever our both 18 and 27 weeks crosses 65 weeks in upward direction, stock is going. So after 18, then 27, then 65. If all the three weekly moving averages is crossed in downward direction by the price action of the chart, we just have to close our entry. We just have to get out of the entry because after that the stock will fall and you don't know how far it will. It depends upon the various condition, news, circumstances of the global economy, the Apple stock things and all things, right? But you can see like it's like a clear indicator that you have to get out from the stock. So now you can see like here in 2008 when we had a global recession, then this price, the stocks goes from $23 to 11. It's almost like 50% reduction. Then it again get up, and from 9 to here like 2013 again it goes for the uh, it's like huge improvement, and stock goes to 88. All right, so again it's crossed in the downward direction, it goes to like fall and all this, right? So every time whenever it stock price action moved and crossed to the lower direction, you have to get out of the position, right? You can see the 65 weekly moving averages is a huge support for any stock. So this is a very key funda, and You just have to, like, if you just see these three moving averages, you will be like in huge profit always. And this is a very golden time coming, because the world is coming to the recession, and soon you will see this this price movement will cross to both, like, all these three moving averages, and you have to immediately get out of this stock and just wait again for, like, it could come from here to like 198 to 135 or 91, whatever, like, I don't know, I cannot predict. But yeah, the major support is around 100, so you have to see, you have to monitor, and you have to keep patience, of course. So once it cross, you just have to get out from the stock, and again when it regain its momentum, and if it's cross after like some 6 months or 7 8 months, then again you can make entry. So you have to, like, keep monitoring the stock and act accordingly, right? So, and for that purpose, I created one chart also. So this is, you can maintain this in a data also, so that you can monitor on the weekly and monthly. So this chart I took on the weekly duration. Similarly, if you see on the monthly duration, that will be the same thing. For monthly duration also, you can see this is a huge support for the stock, and once the support cross, it is like going down. So right now this stock is not down below the 65 moving averages always, but yeah, here on the large duration, like monthly duration, we have a huge support on the 18-month averages, and then 27, and then 65. You can see it's a huge support here. It's again like in 2006, it just touched the 18-month moving average, and it went back. Then again it touched, it went back, and once it crosses this, the stock is coming down. Then again it's crossed upward. Then again the stock is up, up, up. Then again it once it crossed upward, the stock came down, right? So uh, on monthly chart, so like every stock has a different set of criteria, but I think the best is weekly. So for these three indicators, the weekly duration is very good. So you can check, like, for which stock which duration is good. Like on the daily basis, if you want to trade on the daily basis, this is also good. If it, see, once on the daily basis also, once the stock action move cross downward direction to all our three indicators, the price came up, and once it's crossed in the upward direction, price is going up. Then again, if once it's downward, then price came down. So again now it's up. So now again it's uh, trying to cross both, like, it already crossed both moving averages, daily 18 and 27, and once it will cross 65, you just have to immediately came out of the position. So because sometime it touched on the 65 moving average, and it could go back, so that also is possible. Like this, it haven't crossed, it just touched. Then from 25 June 18 to 31st July 18, it just consolidated for one thing, again it goes upward. So the major support is the 65 days moving average after 18 and 27 days moving average, or weekly average, or monthly average, right? So that is the best strategy. You just have to follow this strategy. You don't have to go anywhere, and you'll be always in profit. Thank you so much. Bye bye.